Okay. So good evening to all of you. And we are meeting after quite a long time, I believe. So you have already gone through all the contents, what we have shared in National Income Accounting from the last chapters. I have received one question from Mansha along with a compliment. So thank you, Mansha, for your valuable input. I'm really glad to hear about it. That you are liking the teaching of mine. So thank you so much for that. And I believe all of you are getting, as per the ICI content, that whatever is important for you, you are getting it through my way of teaching. I hope so. So Mansha ki query hai, what is the difference between GDP at basic price and GDP at factor cost? I'll just share it very briefly and then we'll proceed. I hope you have gone through all the notes which I have shared with you people, including the official documents also, where I have shared how the state governments calculate their GDP. So Mansha has already written that she's curious to know about, but Mansha, please go through that document. That will give you a whole lot of insights about that how do they calculate. And apart from that, for the state, you should know one more component before I talk about basic and factor cost. When we talk about supra-regional, you understand, we had shared last class, supra-regional. So for example, I say that telecom in India, oil services in India, or such kind of services which are at a central level. And it's very difficult to segregate for the states. So then when we are not able to segregate here, then in that case, it is calculated for the country as a whole, and then state-wise they go for distributing it for different states. Okay, so that is a supra-regional we have shared in the last class. Now, before I go ahead with today's topic, that is Keynesian theory of determination of national income, I want to share Mansha's query first and foremost. She's asking about the difference between basic price and factor cost. See, basic price, if you can recap, Mansha, we have shared the concept of production tax and production subsidies. So when you, in factor cost, when you add production taxes and you deduct production subsidies, because you understand that production taxes increases the price of the good. So that will be passed on in the terms of basic price. But when we talk about subsidies, production subsidies, which reduces the overall price of the good. And production taxes and production subsidy, I hope you differentiate between product tax and product subsidies. So when you talk about market price, from basic price to market price, you add what? You add product tax, you deduct product subsidies. But when you go from factor cost to basic price, what do? You add production taxes and you deduct production subsidies. Okay, so factor cost is the raw, is the basics. From factor cost, prior there was only used to be two differentiation, factor cost and market price. Now they have started calculating, Government of India has taken into consideration basic price. Basic price is what? In the basic price, in the factor cost, you add production taxes, you deduct production subsidies. What are production taxes? Production taxes are the taxes which are irrespective of the volume. For example, the production stamp duty, property taxes, and other registration cost and everything. So these are all irrespective of that, whether you produce X amount of good or Y amount of good. But since you have started in this particular segment business, you have to go for production tax. So that is included, okay? And production subsidies are what? You are in a particular segment of production. For example, we had shared last class MSMEs or something which is agriculture or something. So the sector specific where you are given subsidies. So that is known as production subsidies. It is not product specific. It is not service specific. Okay, so that's the difference between the two factor cost and basic price. Now today we are sharing Keynesian theory of determination of national income. And how is it different from what we have shared in the last two classes? See, what we started with national income accounting. What we did in national income accounting, we took the basic accounting. That means the facts and the figures. Isn't it? We took facts and figures. That is, that this is the production of this particular sector. agriculture, this is the production of manufacturing sector, and this is the production of the service sector. And this is the income generated in all the segments of the economy by the factors of production. And then we said about expenditure incurred by different segments, by the consumers, by the corporate, by the government, by net exports in terms of exports and imports. So this is how we have taken care about. So what we did over there, we took ex post. Ex post means, ex post is about the act has already been done. Once the expenses have been incurred, once the income has been generated, once the production has happened, that is ex post. So what you have studied till now is ex post. But imagine that the government of India has to make some plans for future. So what government has to do? Government has to see ex post. Ex post means what is the status today, but at the same time, how people are going to spend in future. Which segment is going to, which sector is going to have higher demand, which sector is going to have need more investment, which sector needs to have to be given support, which sector needs to be taxes to be imposed on which sector. So this is about ex ante. Ex ante means how the people are going to spend, how people are going to save. People, I want to say country, because we are talking about country as such. How corporate are going to invest in future. So this is how savings are going to take place in future. That is what is about ex ante. Ex ante means you are going to go for analyzing for the future, which is going to happen in future. Ex post, what we have studied is national income accounting, where the act has already been done. You are analyzing accounts of the country after the records are maintained. But here you're talking about in future, how people are going to consume, how income will be generated in the country, how savings will be there, how much savings will be there in future, how investments are going to generate further income in the economy, how exports are going to take place, how much production will be there. That is what is about ex ante. So the difference between ex ante and ex post is clear. So the term what we have used here is ex post and ex ante. If you can see here, this is ex post, what we did in national income accounting, NIA. All the records were maintained, that was ex post. Ex ante is what we are going to study now. Study now means how the consumption will be, how the investments will be, how much savings will be there in the economy, how exports are going to be, how import production is going to be, how government is going to spend. This is about ex ante. Okay, so this is the concept of ex ante and ex post. I hope it is clear to all of you. I'm not able to see your queries. I hope so. This is working. But don't worry as such. I'll take care about everything. Second half, okay? So first half, you listen carefully. And if you have any queries, I'll take care in the second half. So please do pay attention. So ex post and ex ante is clear. Ex ante and ex post, you should know about the terminologies. So national income account is ex post. Why is it ex post? Because the expenditures have already incurred. The income has already been generated. The production has already happened. Ex ante is how much production corporate are going to produce, how much investment are they going to do, how much consumption, the consumption demand by we people is going to be created. So that's about ex ante. So in this unit onwards, in this chapter onwards, or from this chapter onwards, what we'll do, we'll read about ex ante, okay? Because you see, government has to plan the budget. So budget, how the government will plan the budget? Government will anticipate, no? what is in future going to happen. According to that, they decide about how much taxes to be imposed, where subsidies to be given, where rebates to be given. Okay, so where they have to go for imposing higher tax rate and so on and so on. Okay, so ex ante and ex post, I hope is clear. The next is equilibrium income and output. These are some basic terminologies you should understand. Equilibrium income and output means that when we talk about equilibrium income and output means we are talking about the aggregate in the country. Aggregate, what is aggregate? Aggregate means total countries. Aggregate demand. The total demand in the country should be equal to aggregate supply. If these two are equal, then in that case, you are at equilibrium level of output and income. Okay, so why these two are taken together? Because obviously, if the goods are produced, if there is output, that means there is demand, aggregate demand. Aggregate demand means they are spending. They are spending means they are getting money. So what happens in a normal transaction? You see, when you have any good, let's say this is a good. So this is a good. Okay, so this good, आप समझते हैं कोई भी चीज when you buy from the market, so this is a good. Okay, so when you go for buying a good, you are a consumer and this is a supplier. In a normal course of action, what happens? You supplier has produced this good. Okay, so has produced this good means the fellow had factors of production. You remember we had shared factors of production. So this fellow has produced this good by factors of production, land, labor, capital, and entrepreneur. And this consumer is creating demand for this. So this fellow is creating demand. That means is going to spend. Is going to spend means the money is going to come to supplier. And if money goes to supplier, that means supplier, basically we are talking about the production units. Okay, so it goes back here. It goes back here. It's given in the form of income. So that is why income and output are taken. So whenever there's output, there has to be income generation, isn't it? And if output is at equilibrium, so income will also be at equilibrium. So output equilibrium and income equilibrium. We'll share this later, but I hope the broader concept is clear to all of you. Then the natural level of GDP. Natural level of GDP means there are two things. One, what is the level of GDP of India at present or actual, or where is it performing? Where the GDP level is, how much is the output of the country? And second is potential. Potential means what are you capable of? What is your capability? So potential is potential GDP and the actual GDP. If these two are equal, then you are at natural level of GDP. That means that all the resources in the economy are fully utilized. What are the resources in the economy? Resources in the economy are labor, land, capital, and entrepreneur. Full employment means those people who want to work and have the caliber, they have the job. Land which is there is fully utilized. Capital is fully utilized. Entrepreneurs are fully efficiently employed. That means there's full employment. That is known as natural level of GDP. That means you are at natural level where you should be ideally. Okay, this is known as full employment of resources. Then the next concept is wage price flexibility and wage price rigidity. We will share this later, so I'm keeping it on hold this point of time. Involuntary unemployment. What is involuntary unemployment? There are different kind of unemployment. You might have studied in your social studies also. But to say on a broader front, there are two categories of unemployment, voluntary and involuntary. Voluntary unemployment is that I have skill, I have education, but I don't want to work. This is my choice. I don't want to work. I don't want to work. I want to enjoy my life without working. So it is known as voluntary unemployment. I don't want to work. No, so that is voluntary unemployment. Involuntary is something where you say about that I want to work, I have skill, I have requisite skill, but I'm not getting a job. Involuntary unemployment. I want to work, but I'm still not able to get the job. That is involuntary unemployment. So when we talk, we have shared two concepts here, full employment and involuntary unemployment. So when you are at a full employment, your economy is at the stage of full employment. That means there will be no involuntary unemployment. People, those who want to work, they will be getting job. Not only they want to work, but they have requisite skill also. Okay, so they will be getting job. That is about. So what's the take here? At a full employment, there is no involuntary unemployment. So voluntary can be there, but involuntary won't be there at the full employment level. Okay. Then the next is Keynesian theory. This chapter is about Keynesian theory of determination of income and of national income. John Maynard Keynes is considered as a father of macroeconomics. So why this macroeconomics concept came into existence? And he was the one through his book, which he wrote in 1936, was about theory of employment, interest, and income, where he spoke about that government plays very important role. You have seen what happened during COVID. During COVID cases, what happened during COVID when all over the world, even in India, when countries were passing through such a tough time, COVID cases were going up. So what happened at that time? Corporates were not investing because they were hesitant about, and they were not having enough funds also, because they were hesitant that banks will give. Banks were also hesitant. They were not ready to lend because they also felt like that if we are going to lend, tomorrow they may not be able to pay back. So corporates were not investing, bankers were not lending. But health sector needed investment because the number of cases were going up. Oxygen cylinders were not there. Hospitals were not having enough infrastructure. So who took the charge? Government took the charge. So when income is not there, that means you cannot spend. You cannot spend means further demand in the economy will reduce. So what will happen? Your potential GDP and the actual GDP gap will increase. Yes? The gap between the actual and the potential GDP will increase. Involuntary unemployment will increase. So who takes the charge? Government takes the charge. Okay, fine. You, the corporate, you are hesitant to go for investment. We, the government, will take the charge. That is what John Maynard Keynes proposed about. Okay, so we will be sharing in this chapter two theories. One is classical theory, and the other is Keynesian theory. Classical theory is giving more stress on, emphasizes more on supply front, but Keynesian theory emphasizes more on demand front. So you see, the fulcrum of economy is dependent on two parameters, demand and supply. And which demand we are talking about? Aggregate demand and aggregate supply. Now, any economy you talk about, or you talk about yourself also, your spending pattern or your way of spending money, what plays major role? Is it about the demand, or is it about the supply front? What drives you to buy goods and services? First and foremost, demand, no? Demand. The demand is more important. So that is what Keynes highlighted about, that aggregate demand is more important. Okay, because in short term, what plays role? Aggregate demand. You have seen for oil, what has happened for oil, how crude oil prices have gone up, how the petrol prices have gone up over the period of time. Why? Because the demand is higher. So what is required is that the demand has to be controlled, because supply cannot be increased in short period of time. Can you increase oil supply? No. Can you increase crop production in short period of time? No. So tomato prices all of a sudden going up, onion prices all of a sudden going up. What is required? It is only because of the demand front. Supply cannot be increased in a short span of time. So supply has to be long-term and aggregate demand is short-term measure to bring economy back on track. That is what Keynes proposed about. Okay, so this is what we will be sharing. I don't know how, somehow I'm not able to see your queries. Let's see if I can see. Okay, so I hope what we have shared till now, ex-ante, ex-post is clear, involuntary and voluntary unemployment is clear, equilibrium level of output, income, why it goes hand in hand is clear to you. So what this John Maynard Keynes is the father of macroeconomics. What happened in 1930? There was Great Depression. Did you read about Great Depression? Have you people read about Great Depression? Great Depression basically is about Great Depression which happened in 1930s. The overall demand in the economy was very less. Before I talk about that, first you should understand that what Keynes said about. Keynes spoke about government should increase expenditure. What we have seen during COVID, when things are not normal, then who takes the charge? Government. Government should increase expenditure, lower taxes. You remember government had given so many rebate, IBC terms were relaxed. Then the loans were given more longer period of time for corporate debt restructuring. So many income tax rebates and other things were given. So this is how. So what government has to do if things are not normal, when the demand is less, sentiments are low, so then government has to go for taking the charge. So what government has to do? Has to go for spending, lower taxes. Why should government do it? It stimulates demand. It increases demand. Okay, so it increases the overall demand in the economy. And if overall demand increases, what is going to happen? This is simple concept. You understand what happened during COVID. Why the every player started producing masks? Why they started producing masks? Why many people started investing in health infrastructure? Why they started? Because the overall demand went up. But in the other segment where the demand was not there, then in that case, unemployment increased, output decreased. So we have seen what happened to aviation, tourism. There was no demand. No demand means no job. No job means no income. So that is why it is very important to create demand, sufficient demand in the economy. So this demand is overall demand in the economy. So that is created by government if things are not going in a proper manner. And then to pull the global economy out of depression. Depression means very high level of unemployment. Aggregate demand is very low. People are hesitant to spend money. Corporate are hesitant to invest. That is known as depression, which happened in 1930. So all bad here, all negative. Then John Maynard Keynes said that government play is very important. To overcome this, only government can take the charge. So that is why. So please do remember the core of John Maynard Keynes. He's known as father of macroeconomics. He proposed that government can bring the economy back on track by spending and taking care about through taxes and subsidies. To stimulate the demand, that means to increase the GDP of the country. Okay, so that is why it is known as Keynesian economics. Okay, and this is demand side theory. I've already shared why is it demand side, because there was enough supply, but people were not buying only. So if there's no demand, there's no point having production by the corporate. So you have seen what happened to real estate during pandemic. People had constructed many houses. They had invested a whole lot, but nobody were ready to buy because people lost their job. People were like worried about that future is safe or not. We'll have our job or not. So people started saving more. Saving more means buying less. Buying less means so the inventories were piled up. Many houses were lying vacant, and that's why rental also went down, isn't it? So it is demand side economy. So that's what Keynes spoke about, demand side theory. Okay, which are important, especially in short term. Okay, so this is what is important for you to understand. Then I told you there are two concepts when we talk about macroeconomic theory. One is from the demand perspective, other is from the supply perspective. So prior to Keynes, they were classical economists. So Adam Smith, classical economist. So the classical economists said that there's no role required of government. The consumers and the corporate can manage themselves. So which theory they proposed? They proposed capitalist economy where there's no role of government. Corporate and who else? Corporate and consumers can create. So for example, we say that, so what was the classical economists believed about? Their concept was more confined to supply front. What they believed, if aggregate demand in the economy is going to reduce, what happened during COVID-19? People started consuming less, corporates started investing less. So what happened? If aggregate demand in the economy reduces, it results in decrease in production. Obviously, if you are not demanding, consumers are not demanding, producers are not producing. If they are not producing, why should they have more people? So jobs will reduce. Jobs reduces means those who want to work, they will be working at a less salary. They will be ready to work at less salary. So jobs will be offered to those who want to work at less salary. So wages will reduce. Okay. And at the same time, because wages reduces, so overall price also reduces because people don't want to buy. So prices also reduces. So price are going to reduce, wages are going to reduce when the economy is on the downturn. That is what classical economists believed. Okay. And if this is going to happen, what is going to happen? If the prices reduces, wages reduces, and economy is on the downturn, inflation will reduce. That means overall price level in the economy will reduce. If overall price level reduces, that means more people will be ready to work and the number of jobs will increase because employers are ready to hire people, no, offering at low salary. So they offer them job and they can go for investment also because the price is reduced. So the rate of interest will also reduce. So they'll go for investment. So capital investments also increases. Okay, so investments increases and this results in what? More people will be hired. And because of this, employment will be generated and economic growth will take place. So economy will be back on track. Okay, so economy will be back on track. Okay, so this is what is the concept classically. Now, what is the catch here? Can you get the catch over here? What's the catch here? Do you think that, okay, let me ask you a simple question. During this COVID, when the number of aviation sector was suffering a lot, people were not going, government had banned travel and other things. So what happened because of that? Was it possible or is it so easy for employers to say that if we are giving you 50,000 per month, we'll give you 30,000 per month? Is it so easy to reduce prices with the change in the market? If the prices fluctuate so easily, will you rely on that product to buy? No. So Keynes said about what? This is the difference between the classical and Keynesian. Classical believe that prices and wages are flexible. Flexible means if economy is in the downturn, prices will reduce, wages will reduce. Since prices reduces, wages reduces, inflation in the economy will reduce. Inflation reduces means investments in the economy will increase. Investment increases means employment overall in the economy will increase and economic growth will be back on track. But the problem is that prices and wages are not flexible. Is it so? Are the prices and wages flexible in realistic economy? Do you see? Is it easy to change prices so frequently? Is it easy to change the wage rate? No, you cannot go for changing it. So that's what Keynes said about that prices. Keynesian theory says about what? Price and wage rigidity. Rigid prices, rigid wages, but classical believe they are flexible in nature. So that is the difference. So what are the two major differences we have shared between classical and Keynesian? Keynesian said about what? Aggregate demand in the short term is important. If economy is not performing at full employment level, or there is deficit aggregate demand, that means the demand is less, aggregate demand is less, then government need to intervene. How government should intervene? Government should spend more, government should offer tax subsidies, reduce tax rate and offer subsidies. But class and prices and wages are rigid. If prices and wages are rigid, then in that case, government has to intervene, because classical said about if prices and wages are flexible, if economy is on the downturn, people will start reducing the number of employees, they'll reduce their salary, they'll reduce the price, economy will be back on track. And vice versa. If economy is on the upturn at a very fast pace, if it is increasing, leading to, then in that case, what will happen? The prices will go up, wages will go up, cost will go up. Cost goes up means investments will reduce. Investment reduces means employment will reduce and the economy will be back on track. That was the classical economist concept. But this failed in 1930 when there was Great Depression. And then in 1936, Keynes came out with the concept of aggregate demand-driven economy, which is still practiced today also. Okay, that's the difference. So I've already shared what is aggregate supply. Aggregate supply is the total supply. It describes about what? Quantity of output produced in the country. Output, you remember, we have shared in national income accounting. But how is it different than national income accounting? This is which one? This is ex-ante. Ante means is expected to be produced, is expected to be invested. Corporate government are going to produce this much. That's about willing. You see here, willing. That means it has not yet been produced, but they are willing to produce. Intent to produce. That's what is important to remember by you people. Okay. Aggregate demand means what you intend to spend on. You are willing to spend on. So that's about the aggregate demand. And your spending depends on what? Price level in the economy. Okay. The point at which aggregate supply and aggregate demand is equal, that is known as equilibrium level of output and price level. Okay. Don't worry about your queries. I'm not able to see over here anything, but by 7 o'clock, I'll just go through this. I'll upload it again. I'll go through all your queries and we'll discuss one by one. So no worries, okay? Don't worry, do not get panic. Just try to understand concepts. If your queries are related to what has been covered, I'll take care of it again. Don't worry, okay? So just listen carefully. So now this case, what do you see? We are talking about two-sector model. Two-sector model, that means just a hypothetical case. In actual world, what happens in our actual world? You have exports, you have imports, you have financial institutions, you have government. So there are different, all other sector players are also there. But here we are only talking about two sectors to start with simplification model. Okay, to make you understand the basic concepts, some basic concepts. Circular flow in two sector model, you see there are households. So we are the households. And then there are firms. You remember classical said government has no role. So in this case, we are taking two sector model where there's household and firms. Now household means consumption demand. Okay. And what do? They have factors of production. That means this for the firms in the country, they want to produce goods and services. So what these households they do? They give them services. They give them services. What kind of services they give? They give them factor inputs. So which kind of factor inputs are there? You have land, you have labor, capital, and you have entrepreneur. So these factor inputs are given to the firm. With these factor inputs, firm produces what? Goods and services. These goods and services are purchased by whom? These goods and services. So they give services, they give input factor inputs, they provide their services, they produce goods and services. Now to buy these goods and services, they need income. And who provides them income? Income is provided by firms. Why should firm give them income? Because they are giving their services. So they are giving their land, they are giving their labor, capital, and entrepreneur. In return, firm is going to pay them. What do they pay them? They pay them factor payments. So land gets wages, land gets rent, labor gets wages, capital gets interest, and entrepreneur gets profit. Through that income, they spend on, what do they spend on? They spend on goods and services. But here, the important factor which you have to remember is that firms, whatever they earn, whatever they get, they pay to factors of production. Household, whatever income they get, they spend on goods and services. So that means there's no savings, zero savings. And there's zero over and above investments. Okay, so whatever they produce, they sell. Whatever they get income, they consume. This is how it works. Okay. So this is a consumption function. This was given by whom? Keynes. So now we'll talk about consumption function. Circular flow is clear to all of you? Circular flow. Okay, so consumption function, when we talk about, you remember we had discussed about disposable income in the last class? Disposable income, YD. YD is a disposable income. And disposable income, how do you get disposable income? Disposable income, either you consume or you save, isn't it? So we can say that consumption is a function of disposable income. Higher the disposable income, higher the consumption. And this consumption, whose consumption we are talking about? Consumption of households in the economy. Overall consumption in the economy. So if disposable income goes, what is disposable income? Disposable income is income plus transfer receipts minus taxes. You remember? Transfer receipts, this is what we did in the national income accounting. So disposable income is income which you can go for spending on goods and services, or you can save. And this is total income of the country plus transfer receipts, what you get in the form of allowances, subsidies, and others, and what you have to pay in terms of your tax liabilities and non-tax liabilities. That is disposable income. So this is what is consumption is the function of disposable income. Okay. This you can see here, this A. What is this A? A is the autonomous consumption. Autonomous consumption means this level, this much is not dependent, this much consumption is not dependent on income, disposable income. So this A is the autonomous consumption, which is not dependent on disposable income, maybe some other factors. That is why it is. And number two, if you're not earning, if you're not having any income, that doesn't mean you will stop consuming. So this consumption is there even at zero level of income. Can you see here the income is zero and still the consumption is there. So this autonomous consumption is the consumption at zero level of income. Why? Because you will always be, economy will always be consuming despite not having income, maybe through their past savings, or they'll do what? They'll borrow to consume. So this part, this segment is autonomous consumption at zero level of income. This is known as autonomous consumption. Okay. So remember, your consumption function should never start from zero, from origin. It should always start above the origin. And this depicts what? This depicts autonomous consumption. Now this is the slope. This is the slope. What do you have on y-axis? Y-axis you have consumption. What do you have on x-axis? Income. This is the slope B. Is what the slope B depicts. This B is change in consumption to change in income. Yes. This is the slope. Change in consumption. This is change in consumption. You can see here. This is change in consumption with respect to this. I'm sorry for this. It should go straight. This is delta Y. So this is change in consumption to change in income is slope. And what is this known as? This is known as marginal propensity to consume. We'll share that. The simple consumption function, you understand, do remember two things. When we talk about aggregate demand, two-sector model, consumption and savings, or consumption and investments. But investments in the short term remains constant. So this is not going to change. Consumption drives the economy. And this consumption depends on what? This consumption is a function of disposable income. Okay, so this is the concept which you have to remember. So just I want to take 3 minutes break so I can just upload the queries because I'm not able to see queries. Just give me 2 minutes to just check the query segment because I'm not getting it. Shravan, your query regarding illustration 13, I believe, is national income accounting. We will take care of this after 2 classes. Okay, so don't worry on your queries related to national income accounting. Any question related to national income accounting will be sorted out. Disposable income, Shivam, I've already shared. What is disposable income? Disposable income is the income which is there to dispose of. How do you get disposable income? From the income when you deduct all taxes. So taxes to be deducted and transfer receipts to be added. That gives you disposable income. Okay. Then each topic, please take a fast revision in Hindi. Done. Harsh, I'll do the revision in Hindi. Your PPT can't show. Is it so? Acha, you're not able to see. Okay, I'll share again. Can you see the presentation? Is it visible to all of you? It's okay. While I'm teaching from book only, if you don't know basics, then I can't help it. Okay, thank you so much, Sahil. My notes are worst. Okay. Okay. Thank you so much, Sahil. You can complain against me. I'll appreciate that. Please do it as early as possible. I'll appreciate that. You can complain against me. I'm happy that you are saying this. Thank you so much. My notes are worse, so thanks to you. I'm trying my level best to make you understand the concept. Choice is yours. You don't want to listen, you do not listen, and you can give in writing if you feel like. MPC is change in consumption to change in income. Yes, just read. MPC is change in consumption to change in income. That is what is MPC is all about. Okay, so if you can see the screen, or I'll extend the screen. Okay, so this is the consumption function. Yes, so aggregate demand is the consumption function. Aggregate demand depends on what? Consumption and investments. Consumption and investments. So we have already discussed about in the country, consumption demand and investment. And consumption demand we are talking today about. Consumption demand is what? Consumption demand, you remember this? We have shared through this. So this is the consumption demand. Consumption demand, I'll erase it so that it becomes easy for you to understand once again. Open the book and see yourself. This is from the book only. Okay, so consumption, you can see consumption we have shared is a function of disposable income. Okay, now you can see if we have to write, this is A, this is autonomous consumption, we have already shared. You can write A plus B. What is B? B is the slope. We have shared this is the slope. This is the slope. This is change in consumption to change in income. So this is B. It is a function of what? YD. This is a consumption function. Okay, so consumption is a function of disposable income, number one. Number two, consumption function has two components. One is autonomous consumption. And B is marginal propensity to consume. Marginal propensity to consume is change in consumption to change in income. This is marginal propensity to consume. Okay, so this is the consumption function. And you understand one thing, when we talk about, think yourself, if your income increases, do we spend the entire on consumption? No. So this is what Keynes said about. Keynes said that marginal propensity to consume will always be less than 1. It will be greater than 0, but it will be less than 1. Why the marginal propensity to consume will be less than 1 and greater than 0? Reason being, whatever is increase in the income, you will not go for spending entire amount of your income. You may save, suppose your income increases by 100 rupees. So you may go for consuming 80 rupees with additional income and 20 rupees you will save. Or you may spend 99 rupees and you may save 1 paisa. So this is how MPC is all about. So Keynes gave the concept of consumption function. It has two important components: autonomous consumption. What is autonomous consumption? Consumption at 0 level of income. Why is it significant? It is significant, reason being, if you do not have income, that doesn't mean you will not go for spending. And this is marginal propensity to consume. What is marginal propensity to consume? This is the change in consumption to change in income. And why this slope is constant? This is done for simplification. Okay, so this is about this dotted line depicts what? This depicts about consumption, which is always there, even if income is 0. This is the consumption function. Okay, there are many questions which are asked, numericals which are asked based on this. So this concept should be very thorough to all of you. Okay. So consumption function is clear to all of you. We have shared disposable income. Disposable income is disposable income. Consumption function we have shared. You understand this. And we have shared this disposable income. Disposable income is income minus taxes minus transfer. Basically, minus becomes plus, no? So transfer payments will be added here. So YD is income minus, this is national income of the country, minus taxes plus transfer payments. Okay, this I've already told you. What is MPC? Marginal propensity to consume. What is marginal propensity to consume? Change in consumption to change in income. This is MPC. The fraction, if I write MPC value as 0.8, what it means? It means that for every 1 rupee increase in my income, I'm going to spend 80 is out of this 8 paisa, and I'm going to save 80 paisa, and I'm going to save 20 paisa. 80 paisa I'll go for spending if the value is 0.8. With every 1 rupee increase in my income. That is the concept. So if MPC is 0.8, MPS will be 0.2. Yes, because if my income is increasing by 100 rupees, I'm going to spend 80 rupees. That means 20 rupees I'm saving. So what is MPS? MPS is change in savings to change in income. If my MPC is 0.8, that means what? For each 1 rupee increase, 80 paisa I am consuming, 20 paisa I am saving. So MPS becomes 0.2. What can be the other way to calculate this? How can you calculate other way? So what are we saying about MPC and MPS? MPC plus MPS is equal to 1. That means if I say that if my income increases by 1 rupee and 0.8 I'm consuming, that means 0.2 I'm saving, that becomes 1. If I say MPC is 0.5, that means 50 paisa I'm consuming and 50 paisa I'm saving, that is 1. What is the conclusion you draw through this? If your MPC is higher, that means you're consuming more, you're saving less. Isn't it? If you're consuming more means you're demanding more. You're demanding more means you will spend more, you'll purchase more, producers will be producing more. Okay, so that's the concept of MPC and MPS. There are many numericals which are given to you people based on this. So we'll share this. And this is the consumption function. We have already shared consumption function. What do you see here? You can see here the consumption line. What is this? What is this here? What is this? This is autonomous consumption. What is this change here? Change here is B, that is MPC. Okay, so this is the consumption function given, and how do we write? We write C is a function of A plus B by D. YD is what? Disposable income. What will be the impact of taxes? If the tax rate will increase, then in that case, consumption will decrease. And if taxes are reduced, then the consumption will increase. So this is the impact of taxes on the consumption. So this is the question you can see here. Now the question here is that if consumption function is given to you, let's say the consumption function is given to you. This is the consumption function given. C is equal to 50 plus 0.8y. And if income is 1000 crore, you have to find out consumption. Assume that consumption function is this, and if the income is this, what is the value? You can find out what is the value of MPC in this case. MPC is how much here? MPC is 0.8. You can find out the value of consumption by putting up the value of 1000 crores here. You will get the value of consumption. If they ask you to find out savings, savings will be how much? Savings will be, once you know this consumption, income is given 1000 crores. So income given to you is 1000 crores. Consumption you will find out through this by substituting the value. Once you get consumption, you can find out, because you know consumption plus savings is equal to income. So you have this, you will get this savings. And if they tell you to find out MPS, how will you find MPS? You have MPC here. MPC is how much? 0.8. Yes. So MPS will be how much? We have shared that MPC plus MPS is equal to 1. This is 0.8. This is 1. So this will be how much? 0.2. So you can get MPS, you can get savings through this equation. Another question is that they have given consumption is, so this is how you can find, this is the answer is given, and MPS and MPC is given. So through this equation, if you have to calculate, you will be able to calculate. And what is your basic equation? This is your basic equation of consumption. Okay, so there are many questions which are given. We will be sharing that. So this is what is the consumption function. You can see here income, it is given, income is given, the relationship between income and consumption. Income you can see is increasing from 100 to 200 to 300 and 400. Consumption respectively is 50, 125, 200, 275. These are all in crores because we are talking about economy. If 100 rupees is income, 125 is consumption. So 25 is what? Autonomous consumption. Because income is less, this is this savings basically, this is this savings. This is what? This is what? This one, first one. Here you see what is this? Income is 0, consumption is 50. This is which consumption? Autonomous consumption. That is why it is minus 50, no? Because no income still you're consuming. So this is basically this savings. But now if income goes to 100 and consumption is still 125, still consumption increasing by, is exceeding by 25. So 25 is again this savings. Where you're consuming, whatever income you're generating, you're consuming, savings is 0. And as income increases, respectively, saving goes up. How you calculate MPC? MPC is change in consumption to change in income. You can calculate here change in consumption. 125 minus 50 is 75. 100 minus 0 is 100. So 75 by 100 is 0.75. Then 200 minus 125 is 75. 200 minus 100 is 100. So 100. Here 275 minus 200 is 75. Again 75. 300 minus 200 is 100. So 100 here. 350 minus 275 is 75. And then 400 minus 300 is 100. So you have got the value of MPC. Once you get MPC, you know MPC plus MPS is equal to 1. The value here is 0.75 plus equal to 1. So what will be the value of MPS? 0.25. And that is why you get the value of 0.25 if you calculate MPS. APC is what? Average propensity to consume. Average propensity is simple average you calculate. Consumption by income. Consumption is how much? Consumption initially is 50 by 0. So 50 by 0 will be infinite, no? So the first is infinite. Second is 125 by 100, that is 1.25. 200 by 200 is 1. 275 by 300 is 0.92. What do you see? What's the change you see in the APC value here? You see as income is increasing, APC is decreasing. Average propensity to consume reduces. Propensity means desire. Marginal propensity means desire to consume with additional rupee, additional income. Desire to consume on an average. So as your income increases more and more, your desire to consume in the same proportion is not there. It is less than that over the period of time. That is APC. You can see here APC is continuously reducing. Okay. So this is another question. If consumption is 3,000, I hope you can see my screen. If consumption is 300 crore and income is 600 crore, what is APC and what does it imply? So you can calculate APC simply. Income is 600 crore, consumption is 300. So 300 by 600 is 300. APC is 300 crores. And this implies that what? On an average, 50% of the total income country is spending on consumption, isn't it? So 300 and 600 crore, 50% almost they are spending on, country is spending on consumption of their income. in the country X, 70% of the income has been devoted to consumption, and income is 1,000 crores. 70% is devoted means that out of 1,000, you are spending 70% of it, and rest 30% you are saving. So this is about the consumption. APC, you can calculate like this. Now this is consumption and saving function. So this consumption and saving function, we can see here, you know the concept of consumption. So how did we write consumption function? We write consumption function as C is equal to A plus B by D. Yes. If I have to write saving function, you remember this A was at zero level of income. So this is minus A. What about this? This MPC, this is MPC. How we calculated MPS? MPS is 1 minus MPC. So we can write 1 minus B by D. This is saving function. Yes. So through the consumption function, you can get saving function. Now, if you look at this particular graph here, I'll take different pens so that you understand. Okay, so we see here, we see what? We see consumption. Okay, we see consumption on the y-axis. We see disposable income on x-axis. This is 45-degree line, this 45-degree line which you see over here. This 45-degree line. Okay, so this is the 45-degree. This is the 45-degree line. This is y-axis, this is x-axis. On y-axis, we have consumption. On x-axis, we have disposable income. That means this 45-degree line is dividing it into two equal halves. At any point on this, consumption should be equal to disposable income. That means zero savings, isn't it? If you are on this line all throughout, zero savings. So consumption, income is equal to consumption plus savings. That's the, so if you spend entire on consumption, savings will be zero. But if you are to the left side of this Y1, left to Y1, what do you see? This is what? This is consumption. This is consumption. I'll take some other color. Okay, so this is consumption. This is consumption, okay? Now this consumption is greater than savings here, income. So this is this savings, this whole is this savings. Because consumption is more than income. Now to the right side of it, you see, income is more and consumption is less. So this is what? This is all savings. And if you have to plot savings here, this is your disposable income. So this is all depicting what? This savings. And this point is depicting what? Income, disposable income is equal to consumption, zero savings. And to the right of it, it is all about savings. As income increases, this is the change in the income. With the change in income from this point to this point, what happens? Savings increases. And to left of it, consumption. So as long as, what's the basic learning from this? Basic learning is that if consumption is greater than income, there will be this savings. If consumption is equal to income, there is zero savings. If consumption is less than income, then in that case, there is savings. So this is the relationship between consumption and saving. And saving function we have derived. Consumption is A plus B by D. B is MPC. Saving function is S is equal to minus A, because this autonomous is consumption at zero level of income, plus 1 minus B by D. This 1 minus B is MPS. MPS is marginal propensity to save. That is change in saving to change in income. Okay, so that's the concept. So this is about two-sector model. You remember we had shared two-sector model. So in two-sector model, what do you have? In two-sector model, we have basically, what do we have in two-sector? In two-sector model, we have only firms and households. So taking firms and households here, you can see we have added here investments. So in that graph, investments were not there. Can you see in this graph? I'll erase this so that it becomes easy for you to understand. Okay, can you see this? Savings, in this only we are talking about consumption and savings. We are talking only about consumption and savings. We are not talking about investments, no? The next graph talks about consumption, savings, and investments. So that means we are talking about two-sector model now. Consumption and saving, we were talking about whom? We are talking only about from the household. Now we are talking about two-sector model where we are talking about corporate as well as household. Okay, so this is about consumption and savings by whom? This consumption and savings is by whom? By us. And consumption and investment is by whom? By corporate. Okay, so these are the two demand curves you can see here, consumption and savings and consumption and investment. And this is core consumption, basic consumption. Okay, so now on the lower panel, if you see, we have investments and we have savings. In the last graph, what we took, only we took savings and income. Now we are taking investments also. So initially here at point E, you can see here at point E, consumption plus investments is equal to consumption plus savings. That means these two are at equal. That means at equilibrium level, consumption and investment demand is equal to consumption and savings. So this will cancel out, this will cancel out. At equilibrium, investment should be equal to savings. And you can see here in the lower panel at equilibrium, investments are equal to saving. Here. But if you take to the right of this equilibrium, to the right of this equilibrium, what do you see? This is investments and this is savings. So savings are more. Isn't it? Now look to the right side of this Y2 with respect to YG. If you look to the right side of it, what do you see? This is the aggregate demand. This is C plus I. And this is C plus S. That means it is about savings. Because C will cancel out savings and investment. So savings are more than investments. So saving exceeds. So here you can see savings are more than investment. If you see to the left of it, investments are more, savings are less. Now, if this is a scenario, this is a two-sector model. The two-sector model, we took care about what? Firms and households. Firms, they go for investments and households, they go for savings. Both of them, they consume. So that is what is the component of C. As long as savings are more than investments, or let's say if savings are less than investments. If savings are less than investments, so what is happening here? You can see here savings are less than investments. Investment is more. And savings are less. Savings are less means people are consuming more. Consuming more means they are demanding more. They are demanding more means corporate have to invest more because their inventories will reduce, no? So if inventories reduces, then in that case, they have to invest more. So they invest more, they produce more, and they produce more means income increases in the economy. So income increases from Y1 to Y0. But if you are at Y0, and if you are at Y2, that means savings are more than investments. People have saved more. Savings increases means consumption overall is less. Consumption overall is less means what is going to happen? The demand is overall going to reduce. Demand reduces means inventory piled up will increase. Inventory piled up with increases means they'll stop the output, they'll reduce the employment. They reduces the employment, that means you output in the economy will, income in the economy will reduce, and then economy will be back at this position again. So if you are to the left of it, that means savings are less and investments are more. That means consumption is more. Consumption is more means demand is more. Demand is more means inventories will reduce. Inventories reduces means output will increase. Investments will increase. Investment increases. Employment will increase. Income will increase. And it moves from Y1 to Y0. So obviously, Y0 is at a higher level as compared to Y1. And as you move to Y2, in that case, savings are more, but investments are same. So savings increases means consumption overall in the economy will reduce, inventories will increase. This is the simple logic which you have to understand. If that's why you see countries like developing country like India, this may be totally irrelevant for some people, those who do not want to connect with the market at all, but it's okay, people like Sahil. So I simply want to say that if the overall demand in the economy is low, people start consuming less, then in that case, corporate will not be producing. Investments in the economy will reduce, income will reduce, output will reduce. And that is why you see developing countries like India, why people want to invest more in India, why Nokia is here, why Apple is here, why Samsung is here, why Unilever is here, all those players are here because we have huge MPC. MPC is increasing. And number two, you have more youngsters. Youngsters means they have higher MPC to consume. So consumption demand is more. So savings are less. That is making more job opportunities in India, more investments in India, more growth in India. So that's how. Okay, so consumption and investment demand and consumption and saving with respect to two-sector model, this is what we have shared. So if consumption demand is more, inventories will reduce. That's the simple logic you should understand. So savings and investments, I hope is clear. So what we have shared is about savings and investments will be always equal at the equilibrium level. At equilibrium, ex-ante savings. Ex-ante means intended savings will be equal to intended investments. So what you plan to invest as a corporate and what I want to save as household is at par. That is known as equilibrium. So savings should be equal to investments at the point of equilibrium. This I'll share after break about inflationary and deflationary. So saving and investment if intended savings are greater than intended investments. I've already shared what will happen. Inventories will increase. Why inventories will increase? Inventories will increase because consumption will reduce. If consumption reduces, inventories will pile up, and output in that case will decrease. Output reduces means income will decrease. Income reduces means it will lead to decrease in the national income. So this is also known as leakages and injections. These savings are what? Savings are leakages. Why savings are leakages? Because they are pulling out money from the system. It reduces the velocity of transactions in the economy. But if investments are more, what happens because of investments? Investment leads to higher generation of income, because investment leads to what? More output, more employment, and higher productive growth, isn't it? So investments are injections which injects money, which injects growth, but savings are leakages. So if leakages are more than injections, what is going to happen? Economy will be on the downturn. GDP will reduce. Income will reduce. That is why it is important that injections should be more. Investment should be more. Investments are more means it leads to more growth. That's why you see when we have flyovers, we have more schools. When we invest in roads, what happens because of that? It creates multiple jobs. People get jobs, and people get job means they get income. They get income means they can spend. They can spend means they create more demand, and the GDP of the country will further increase. So this is how it happens. Okay, so this is the concept which I wanted to share: investments, savings, leakages, and injections. I'll take your queries after this, taking a break of 5 minutes, 10 minutes, and then we'll resume with two more concepts to be discussed for this chapter, for this class, and then we'll discuss about what we have taken care and your queries. Okay, so I'll take a break of 10 minutes and then we'll resume after 10 minutes. Okay, so I'll take queries and then we'll proceed because I can see some students have written queries. Let me go one by one before I proceed. One query is related to what is NIA? NIA is National Income Accounting. I hope, Mukta, you were not there, I believe, in prior classes. That's why you don't know this. Actually is less than the potential GDP. Yes, you're right. Then there's question one related to, so NIA is sorted out, Mukta, I believe so. Then I saw one common question which was there with respect to that investments and other things when we were talking about savings and investment. Okay. Ankshil is asking about Y1 is Y plus TR minus TA. Explain. Okay, I've already shared, but I'll share once again with you people. Just a brief about, and some students are saying 15 minutes Hindi mein bolna recap, so I'll try to do. Don't worry on that. Okay, so see, disposable income of the country. Disposable income is the income of people to dispose of. Dispose of means either you'll consume, you'll save. Now, there are two categories of income. Income, one which you earn, other you get somehow or the other. For example, I say that you start earning, you get 30,000 salary. Just to be make it things simpler, do not be so disappointed. She's saying 30,000. Okay, so let's say you get 30,000 in hand as a salary, and 5,000 rupees your mama gives you every month. So that is transfer receipts. No, you're not doing anything additional for that, but you are getting paid. Similarly, government also goes for such transactions. Allowances are given. Then government also gets other benefits from the rest of the world without giving them grants and aids, other things. Okay, so transfer receipts. So transfer receipts add on in your terms of your disposable income. No, so transfer receipts. And what about taxes? Taxes reduces your disposable income. So taxes reduces your disposable income, transfer receipts adds to your income. That is what is disposable income is all about. Okay, so that is clear. I'm actually to you, I hope so. Then Harsh, I'll take care in Hindi, don't worry. Okay. Then it is from 1.56 page number. Just be the saying 1.56. Okay. 1.56, yes, the graph you're talking about. Okay, good. Okay. Then any other two? Yes. Along with the savings, is investment zero in the two sector economy? Yes, this is what I want to clear. There are many students who have this doubt regarding when we had shared two sector model. Two sector model, I told you that they go for consumers, they go for consumption segment, they spend entire, and the corporate, they go for paying entire amount. So this was simply, my dear, for explaining the concept. Hypothetical, it was a hypothetical concept, okay, as per given in your book. And as per to make things understand, okay, so it is hypothetical, it's not exactly it happens. Okay, so to make you understand the concept over there, I wanted to share one more thing I missed over there, I believe so. Real flow and money flow, I didn't share, I believe so. I want to share that. Yes. Okay, so good you asked this question, why we had taken this assumption here. Okay, why do we go for taking that assumption here? I'll tell you why. Because there are two concepts which you have to understand. One is real flow and other is money flow. What is real flow and money flow? Real flow is the flow of goods and services. Okay, so the dotted one which you see is real flow. Real flow in terms of goods and services are produced. Factor inputs means they go for rendering their services. Factor input, land gives its services, land is there, labor is there, capital is there, entrepreneur. So the inner dotted line which you see here is known as real flow. What is real flow? Real flow where the transaction of goods and services is happening. Actually, the transaction of goods and services is happening. Goods going to the household from the firms, and here this is about factor inputs going from household to firm. So this is real flow. Then there is a money flow. Money flow is that we the household, we buy goods and services. How do we buy? We spend money. So that is money flow. So the outer circle is money flow. This solid line which you see is money flow. This outer circle is money flow. This is money flow. So to make you understand the concept of money flow, to make you understand the concept of factor income, that is why this concept has kept some assumptions. Okay, these are assumptions that there's no investments, but actually there are. Otherwise, how the economy is going to sustain? Okay, so what you see here in the lower panel, factor payments is equal to household income, is equal to household expenditure, is equal to total receipts of firms, is equal to value of output. So this is an assumption here to make you understand the concept of real flow and money flow. I hope it is clear, real flow and money flow to all of you. Okay, so this is what I wanted to share. So it's clear, I believe. Jalagam, Rahul is clear. I hope it is clear to you. Okay. Activity question 1 about APC, that how APC is 300. Okay, Harsh, I'll share that. F1, F0, and F2 once again. Okay, I'll share that. Okay. Okay, so this is what is clear. I hope that query is sorted out, that investments and savings, that is clear to all of you. Then the graph again, once again, the graph we want to share. APC concept is, okay, here, APC. So what is they are asking you about? They're asking you if consumption is 300 crore and income is 600 crore, what is APC? How do you calculate APC? See, this one, we had already done it. How we calculate APC is consumption by income. Consumption by income. Consumption is how much? 300 and income is 600. No, APC is, this is 300 by 600. 1 by 2, it will be 1 by 2. Yes, you're right. APC is 1 by 2. Value is wrong here. APC is 1 by 2. Yes, you're right. Okay. Then the next concept, so that is correct. Then Harsh is asking about F1, F0. I'll do it and then we'll share about inflationary, deflationary, and then I have to go for which one you're talking about, F1, Y1, Y0, this one? I don't know, Harsh, you can tell me later which graph you're talking about. Okay, so now we are sharing the concept of deficit demand. Deficit demand, you can see here. The classic example is about deficit demand, overall demand in the economies. Deficient demand means low level of demand. Deficit demand, deficient demand is low level of demand, then what is required? What is required is less than that. Okay, so that is deficient demand. Now you look at this graph here. If you look at this graph here, on the first understand the variables. On the x-axis you have what? Output and income. We have shared prior also. Whenever you talk about output, income will be there, isn't it? Output is there because that is why we had shared that two-sector model to make you understand. So production is there, that means factors of production are contributing. They are getting paid for their services, so that is income. So output and income is always, you can mention on the x-axis. Y-axis, we are taking aggregate demand. Aggregate demand, we have taken at C plus I. C is consumption demand, I is investment demand. Okay, so this is aggregate demand. So you see here C plus I, one is 0 with a superscript and other is with 1. What it means, yahan pe initially, and this is a new one. Okay, so let's see this one. This one, I should take it. This one is initial. Okay, so this one is initial. Okay, so this is the initial. Okay, so you are at point G, economy is at point G, output is Q asterisk, and in that case, consumption and investment demand is here. And this is what? This one is aggregate supply. Okay, so this is aggregate supply or Y. Okay, so this is aggregate supply or Y, and this is aggregate demand. This is aggregate demand. Okay, so aggregate demand is at G and aggregate supply is at F. That means this FG is what? This much is the deficit demand, isn't it? Because aggregate demand is at G and aggregate supply is at F. This means what? This is deficit demand. Deficit demand will lead to what? Will lead to having surplus inventories here because the demand is less. Corporate, let's say, take a simple example here. One of you were saying that you're finding it difficult if I write it here itself. I'll go for adding. I'll write here. Write the blank space. Okay. So this is the concept. So F at point F, do understand that here G is the point at which aggregate demand is, but you need it at point F. That means FG is deficit demand. One, you understand FG is deficit demand, one component. Now, what are the repercussions of this? What happens because of FG deficit demand? Deficit demand means it is less than aggregate supply. That is why what is going to happen? That means corporate overall inventories will be more. So inventories are more because aggregate supply is more, demand is less. Now, since inventories are more, they'll go for reduction in output. Output reduces means employment reduces. Employment reduces means income reduces. And this income, which income we are talking about? Total income in the country, total employment in the country. Okay, output reduces inventory. And how long this will be going on? Till this aggregate supply is going to match up with this deficit demand. That is why you see this downward arrows and this shift in output and income from this right to left, that means income in the economy decreases. When income in the economy will reduce? When output in the economy will reduce? When there's deficit demand in the market, demand in the economy. This is known as deflationary gap. Now, can you connect with COVID? What happened during COVID? What happened during COVID? Demand reduced. Why demand reduced? Because people were apprehensive about spending money. So overall demand. So ideally it should have been at F, but before COVID, where were we? We were at F. During COVID, we reached to G. And this resulted in deficit demand. And because of that, what happened? Output reduced, income reduced, employment reduced. Why it happened? Because inventories were piled up. So to adjust those inventories, output reduced, employment reduced, investments reduced, income reduced in the economy. And that's why the income shift from Q asterisk to M. So what is the conclusion you draw over here? You can draw the conclusion that if there's deficit demand, in that case, unplanned inventories in the economy will be more, because the producers might have thought that the demand would be more, but the demand is less. So since the demand is less, expenditure is less, income for the corporate sector is less, they already have inventories, they'll stop investing further, they'll reduce their output, they'll reduce employment, income will reduce. To overcome this gap, deflationary gap, government may intervene. Government may go for spending, government may give subsidies, government may go for giving rebates. This will help corporate to produce at a lower cost. Output will increase, employment will increase, and investments in the economy will increase, and the economy will come back to the track. So deflation is bad. Deflationary gap, deficit demand is bad. And all countries over the world, you see what is happening during this Ukraine and Russia crisis. Ukraine will be having deficit demand, isn't it? So output will reduce, income will reduce, employment will reduce. This is deflationary gap. Okay, that is how this concept of deflationary gap. But if investments in the economy increases, so what you see, this dotted line you see, if investments in the economy increases, then you will be back on track. So see, what is required is, you are at investment I0, investment required is I1. And if investments are going to increase, output is going to increase, employment is going to increase, income is going to increase, GDP of the country will increase, and this gap will be overcome. This is deflationary gap. Example of this is COVID. Example of this is some war, or some agriculture constraints. It can be anything. Okay, it can be sector specific, it can be overall in the economy. This, we have seen this during COVID, it is overall in the economy, which you see. Okay, now reverse of deflationary is inflationary gap. Over there, what we shared that deficit demand. Here there is excess demand. Excess demand means, this is excess demand. Excess demand means, you see in this case, ideally, economy should be performing at F. Because this is what? This is Y, or aggregate supply. And this is aggregate demand. This is aggregate demand. Okay, at this point, F point, aggregate supply is equal to aggregate demand, F, and the economy should perform at Q asterisk. But here what's happening? This is resulting in inflationary gap. How much is the inflationary gap? This is the inflationary gap, because economy is actually performing here. This is excess demand. Excess demand means that corporate have thought about overall demand, consumption demand will be less. And based on that, they have gone for less inventories. But demand has super succeeded over it. And because of that, what happens? There's shortage of inventories. Shortage of inventories. You have to work overtime. You have to hire more people. And in that case, you'll go for more. Expenses will increase, no? Cost of production will increase. Reason being, you are going for short period of time, you have to produce more. So that will lead to what? Price level will increase, wage rate will increase, because you tell people to work overtime, you tell them to work more than what they can work. They have been working, they'll charge extra. What will happen to the cost component? Cost will escalate. Cost escalates means overall cost of production will increase, price level in the economy will increase, wage rate in the economy will increase. This will lead to inflation in the economy. So this is the inflationary gap. So inflationary gap happens when there's excess demand. Excess demand leads to what? Shortage of inventories, just reverse of this. What happens here? Over here, you had deficit demand, what we have seen during COVID. But if things are moving, if you believe that economy is going to perform very well and people start spending at a very fast pace, if you spend more and more, then in that case, what happens? You demand more. But if the corporate have not planned according to your demand, then in that case, they will be running short. If they're running short of inventories, they have to meet that gap in a short span of time. For meeting that gap, what do? They have to work overtime. They have to pay them extra salary. Time increases. Then in that, because of that short span of time, inventories, you want to go for it. So it will increase inflation in the economy. So that leads to those who can pay, they'll pay higher and higher price. This will pull up prices up and inflation will increase. So this is known as, so you see, deflation is also not good. Deficit demand is not good. Excess demand is not good. Demand which matches up with the aggregate supply. What the corporate they plan and what consumers they go for spending. If these two are going to match, will be at equilibrium. That is known as equilibrium output. Equilibrium output is clear. So equilibrium output is that what corporate they plan and what consumers they spend. When these two are going to match, that is going to lead to equilibrium level of output. So this is the concept which I wanted to share with you people, inflation, deflationary. Now there are two things. One is about, some of you want revision in Hindi. So I'll sum it up. And then some of you were asking about this also, quiz questions also. That's okay. I can ask questions also to you people and you can write down. I'm not jotted over here, but I can definitely ask you questions and you can write your answers. Okay. So let's share. I'll start sharing so that it becomes easy for you. Okay. तो अभी तक हमने जो नेशनल इनकम अकाउंटिंग में कॉन्सेप्ट किए उसमें हमने डिस्कस किया कि इकोनॉमी में कितना प्रोडक्शन हो रहा है, कितनी इनकम जनरेट हो रही है, कितना एक्सपेंसेस हो रहा है. वो सब फैक्ट्स एंड फिगर्स हैं. जो कौन मेंटेन करता है? मिनिस्ट्री ऑफ स्टैटिस्टिकल प्रोग्राम एंड इम्प्लीमेंटेशन, सेंट्रल स्टैटिस्टिकल ऑर्गेनाइजेशन मेंटेन करता है. दैट इज व्हाट एक्सपोज्ड. एक्सपोज क्यों है? बिकॉज वो ऑलरेडी रिकॉर्डेड है, वो फैक्ट्स एंड फिगर्स हैं. किड्स के इस चैप्टर में हम बात कर रहे हैं, इस चैप्टर ऑनवर्ड्स हम बात करेंगे एक्सपोज्ड, ex-ante. Exposed we have already discussed about. Ex-ante. Ex-ante means जो आप इंटेंडेड हैं करते हैं, जो आप चाहते हैं, जो आप सोच रहे हैं करने के लिए, दैट इज अबाउट इंटेंडेड. ओके, सो व्हेन वी टॉक अबाउट ex ante, that means you are planning, you are working on it, you may go for spending on it. So अब इसमें दो segments हैं. 1930 में what happened in 1930, अगर आप लोगों ने पढ़ा है, ग्रेट डिप्रेशन हुआ. ग्रेट डिप्रेशन में क्या हुआ? आउटपुट था, कॉर्पोरेट प्रोड्यूस करना चाहते थे, कैपेसिटी भी थी, बट कंजम्पशन डिमांड ही नहीं थी. इफ देयर इज नो कंजम्पशन डिमांड तो क्या होगा? प्रोडक्शन सरप्लस हो जाएगा, और उस सरप्लस को एब्जॉर्ब करने के लिए प्रोडक्शन को स्टॉप करना पड़ेगा. प्रोडक्शन स्टॉप करना पड़ेगा मींस जॉब्स, एम्प्लॉयमेंट रिड्यूस होगा. एम्प्लॉयमेंट रिड्यूस होगा मींस जो लोगों को जॉब चला गया उनकी इनकम चली जाएगी. तो ओवरऑल जीडीपी ऑफ द कंट्री विल बी रिड्यूस्ड, डिमांड ओवरऑल इकोनॉमी में कम हो जाएगी. एंड दिस हैपेंड इन 1930s इन ग्रेट ब्रिटेन टू दैट एक्सटेंट कि लोगों के पास जॉब नहीं था, खाना नहीं था. देन इन दैट केस जॉन मेनार्ड किन्स जो इकोनॉमिस्ट थे, उन्होंने कहा कि इस केस में गवर्नमेंट को इंटरवीन करना पड़ेगा. गवर्नमेंट का रोल बहुत इंपॉर्टेंट है. गवर्नमेंट को एक्सपेंडिचर करना पड़ेगा. गवर्नमेंट को लोगों के पास पैसे क्रिएट करने की कैपेसिटी देनी पड़ेगी, ताकि लोग को एक कॉन्फिडेंस आ सके कि हाँ, हम वी कैन स्पेंड, वी कैन बाय. गवर्नमेंट टैक्स रेट कम करे, गवर्नमेंट इंसेंटिवाइज करे, गवर्नमेंट लोगों को मोटिवेट करे ताकि वो स्पेंड कर सके. जैसे आप अभी देखिए, गवर्नमेंट ऑफ इंडिया, व्हाट द गवर्नमेंट इज डूइंग, गवर्नमेंट इज क्रिएटिंग हाउसेस फॉर पीपल, गवर्नमेंट इज डूइंग सो मेनी, हैज टेकन इंसेंटिव्स. तो इसकी वजह से क्या हो गया है, लोग स्पेंड कर रहे हैं, ताकि उनमें कॉन्फिडेंस आ गया है कि हाँ, हमको स्पेंड करना चाहिए. अगर आप स्पेंड करेंगे, कंजम्पशन एक्सपेंडिचर होगा, तो देन इन दैट केस इन्वेस्टमेंट्स होगा, इन्वेस्टमेंट्स होगा तो जॉब्स होंगी, जॉब्स होंगी तो इनकम होगी, इनकम होगी तो फर्दर ग्रोथ ऑफ इकोनॉमी होगी. So that is what Kins concept is all about. Okay, so ex ante and ex post में difference clear. Then दूसरा concept ये है actual and realized in terms of दो set of stakeholders हैं. One है corporate, other है consumers. Now consumers, they decide about कितना they want to buy, they want to spend. According to that, corporate should go for investments. If corporate they invest more and consumers they go for, अगर consumption demand less है और corporate ने investment ज्यादा कर दिया, तो उस केस में क्या होगा? corporate की inventories बढ़ जाएंगी because consumption demand less है. inventories बढ़ने से क्या होगा? they have to stop production, production रोक देंगे. production रोकने से क्या होगा? employment कम हो जाएगा. employment कम होने से इनकम कम हो जाएगी, आउटपुट कम हो जाएगी. सो ये इसीलिए इंपॉर्टेंट है इक्विलिब्रियम लेवल ऑफ आउटपुट के लिए कि जो कॉर्पोरेट ने इन्वेस्टमेंट्स प्लान किए हैं उतना ही हाउस होल्ड ने डिमांड क्रिएट की है, करेंगे. अगर दोनों मैच करेगा तो इक्विलिब्रियम आउटपुट होगा, और इक्विलिब्रियम आउटपुट होगा तो इक्विलिब्रियम इनकम होगी इकोनॉमी में. अगर इससे डेविएशन होगा तो उस केस में या तो एम्प्लॉयमेंट कम होगा या एम्प्लॉयमेंट बढ़ेगा. देन देर आर टू थ्योरीज, एक है क्लासिकल इकोनॉमिस्ट और एक है किन्सन इकोनॉमिस्ट. किन्सन इकोनॉमिस्ट वी हैव शेयर्ड, उन्होंने कहा कि सबसे इंपॉर्टेंस आपको देना पड़ेगा डिमांड फ्रंट पे, एग्रीगेट डिमांड पर. बट क्लासिकल इकोनॉमिस्ट ने कहा कि कॉर्पोरेट और हाउस होल्ड, जैसे हमने टू सेक्टर की मॉडल की बात की, कॉर्पोरेट हाउस होल्ड अपने आप सब कुछ मैनेज कर सकते हैं. फॉर एग्जाम्पल, अगर कॉर्पोरेट ने ज्यादा इन्वेस्टमेंट्स कर दिया, डिपेंडिंग अपॉन थिंकिंग अबाउट के हाउस होल्ड बाय करेंगे, इन दैट केस अगर हाउस होल्ड नहीं बाय कर रहे तो कॉर्पोरेट क्या करेंगे? कॉर्पोरेट ऑब्वियसली प्राइसेस कम हो जाएंगी, बिकॉज उनको तो आफ्टर ऑल इन्वेंट्रीज को सेल ऑफ करना है. प्राइसेस कम हो जाएंगी तो वो जो वेजेस हैं, जो लोगों को हायर कर रहे हैं, उनको कम वेज पे हायर करेंगे, बिकॉज ऑलरेडी उनके पास इन्वेंट्रीज पाइल्ड अप है. जिसको काम करना है लो वेज पे काम करो. So they'll reduce the wage rate. If they'll reduce the wage rate, what is going to happen? Cost उनकी कम हो जाएगी, cost कम हो जाएगी, इसीलिए उनका इन्वेस्टमेंट्स बढ़ जाएगा. इन्वेस्टमेंट बढ़ने की वजह से क्या हो जाएगा? जॉब्स बढ़ जाएंगे. So this is the concept given by classical. Classical ने क्या कहा कि अगर intended investments ज्यादा हो गए, then the demand, then in that case, wages will adjust, prices will adjust. But Keynes ने कहा कि it is not easy to go for adjusting wage rate और price, क्योंकि रियल वर्ल्ड में ऐसा नहीं होता है कि अगर इन्वेंट्रीज पाइल्ड अप हो गई हैं या ओवरऑल डिमांड कम हो गई तो आप अपने एम्प्लॉयज को बोलो कि आप सैलरी कम ले लो या आप अपने प्रोडक्ट्स की प्राइसेस कम कर दो। बहुत सारे फैक्टर्स हैं, आप ऐसे कर सकते हो प्राइसेस चेंज कर। आपने देखा होगा ड्यूरिंग जीएसटी व्हाट हैपेंड, जीएसटी के समय जब जीएसटी के इम्प्लीमेंटेशन की वजह से प्राइसेस चेंज हो गया, सारा पैकेजिंग कॉस्ट सब कुछ बढ़ गया। तो इज इट इजी टू चेंज प्राइसेस? इज इट इजी टू गो फॉर, अगर आप एम्प्लॉय हो आपकी वेज रेट ऐसे इजीली कम ज्यादा हो सकती है? नहीं हो सकती। दैट इज व्हाट किन्स सेड अबाउट। तो किन्स कॉन्सेप्ट वाज अबाउट वेज प्राइस रिजिड होते हैं, क्लासिकल बिलीव वेज प्राइसेस फ्लेक्सिबल होते हैं। किन्स ने कहा कि इनवॉलेंट्री अनएम्प्लॉयमेंट में भी इक्विलिब्रियम हो सकता है। दैट मीन्स कि कुछ लोग अनएम्प्लॉयड हो सकते हैं पर फिर भी इक्विलिब्रियम हो सकता है। क्लासिकल ने कहा कि वहां पे हमेशा फुल एम्प्लॉयमेंट ही होता है। तो दिस इज द डिफरेंस। तो क्लासिकल कहते हैं कि एग्रीगेट सप्लाई इंपॉर्टेंट है, जो प्रोडक्शन उन्होंने डिसाइड कर लिया, इन्वेस्टमेंट डिसाइड कर लिया, उसके अकॉर्डिंगली डिमांड चेंज होगी। बट किन्स कहते हैं कि एग्रीगेट डिमांड ज्यादा इंपॉर्टेंट है सप्लाई को एडजस्ट करने के लिए शॉर्ट टर्म। So John Maynard Keynes and classical is clear, I hope so. Then we had shared two sector model, जहां पे आपके लिए ये एक हाइपोथेटिकल मॉडल है जिसमें आपके लिए इंपॉर्टेंट है अंडरस्टैंड करना कि दो कॉन्सेप्ट्स हैं, रियल फ्लो और मनी फ्लो। रियल फ्लो टर्म से ही पता चलता है, रियल फ्लो मींस एक्चुअली गुड्स प्रोड्यूस हो रहे हैं, एक्चुअली लोग अपनी सर्विसेज दे रहे हैं। हु आर द फैक्टर्स ऑफ प्रोडक्शन? लैंड है, लेबर है, कैपिटल है, एंटरप्रेन्योर है। So these are real flow. मनी फ्लो क्या है? जिसमें मनी फ्लो हो रहा है एक से दूसरे में, सेगमेंट में, फर्म से हाउस होल्ड में, हाउस होल्ड से फर्म में। हाउस होल्ड गुड्स बाय करने के लिए, सर्विसेज बाय करने के लिए फर्म्स को पैसा देंगे और फर्म्स हाउस होल्ड की सर्विसेज अवेल करने के लिए उनको सैलरी देगी, उनको पेमेंट करेगी। So these are money flows. And in a circular flow दोनों बराबर होंगे, जितना पैसा जनरेट होगा, जितना पैसा खर्च होगा, दोनों बराबर होंगे। जितने गुड्स प्रोड्यूस होंगे, जितनी सर्विसेज प्रोड्यूस होंगी, उतनी ही कंज्यूम हो जाएंगी। दैट इज अ सर्कुलर टू-वे सर्कुलर फ्लो मॉडल। देन वी हैव डन कंजम्पशन फंक्शन गिवन बाय किन्स। किसी भी कंट्री के लिए जीडीपी ग्रोथ रेट के लिए इंपॉर्टेंट है कंजम्पशन डिमांड। अगर कंजम्पशन डिमांड नहीं होगी तो कंट्री ग्रो नहीं होगी। बिकॉज इफ यू आर नॉट कंज्यूमिंग, इफ अगर आप डिमांड क्रिएट नहीं कर रहे हैं, कॉर्पोरेट किसको सेल करेंगे? व्हाई शुड दे प्रोड्यूस? इसीलिए आप देखिए वो ही गुड्स बनते हैं जिसकी डिमांड होती है। तो कंजम्पशन डिमांड, तो कंजम्पशन डिपेंड किस पे करता है? इकोनॉमी का कंजम्पशन ओवरऑल किस पे डिपेंड करता है? डिस्पोजेबल इनकम पर। डिस्पोजेबल इनकम क्या है? डिस्पोजेबल इनकम इज इनकम जिसमें से आप सारे टैक्सेस और टैक्स नॉन टैक्स लायबिलिटीज अपनी माइनस कर दीजिए और जो भी आपको ट्रांसफर रिसीट्स मिल रही हैं उसको ऐड कर दीजिए। अब इसमें सबसे इंपॉर्टेंट कॉन्सेप्ट है मार्जिनल प्रोपेंसिटी टू कंज्यूम। व्हाट इज मार्जिनल प्रोपेंसिटी टू कंज्यूम? अगर आपकी इनकम ₹1 बढ़ती है तो आप उसका कितना परसेंटेज खर्च करते हैं? इफ इट इज इंक्रीजिंग ₹1, आप 80 पैसा खर्च कर रहे हैं, आप 90 पैसा खर्च कर रहे हैं, आप 60 पैसा खर्च कर रहे हैं या 50 पैसा खर्च कर रहे हैं? अगर आप 50 पैसा खर्च कर रहे हैं तो आपकी एमपीसी कितनी होगी? 0.5। अगर आप 60 कर रहे हैं तो 0.6, अगर आप 75 कर रहे हैं तो 0.75, अगर आप 80 कर रहे हैं तो 0.80। जितनी ज्यादा आपकी एमपीसी होगी उतना ज्यादा परसेंटेज ऑफ इंक्रीज इन इनकम को आप स्पेंड करोगे, और जितना ज्यादा आप स्पेंड करोगे उतनी ज्यादा आप डिमांड क्रिएट करोगे। डिमांड क्रिएट करोगे मींस प्रोडक्शन होगा, प्रोडक्शन होगा मींस एम्प्लॉयमेंट होगी, एम्प्लॉयमेंट होगी मींस इनकम होगी। सो मार्जिनल प्रोपेंसिटी टू कंजम्पशन इज वेरी वेरी इंपॉर्टेंट। इसमें एक कॉन्सेप्ट होता है ऑटोनोमस कंजम्पशन। ऑटोनोमस कंजम्पशन क्या होता है? कंजम्पशन, सपोज आपके इनकम कंट्री में इनकम नहीं है, दैट डजंट मीन कि आप कंजम्पशन बंद कर देंगे, यू विल स्टिल कंज्यूम। सो दैट इज नोन एज ऑटोनॉमस कंजम्पशन। इसलिए आप देखिए 0 से शुरू हो रहा है, ओरिजिन से। दिस ऑटोनॉमस कंजम्पशन। ऑटोनॉमस कंजम्पशन कहाँ से आएगा, कहाँ से मीट करोगे आप अपना जीरो लेवल ऑफ इनकम पर? यू विल मीट इट थ्रू, या तो आप अपनी पास सेविंग से विड्रॉ करोगे या किसी से बोरो करोगे। सो दिस इज अबाउट ऑटोनॉमस कंजम्पशन। तो बेसिकली ये डिस सेविंग्स का कंपोनेंट होता है। ओके, सो दिस इज क्लियर। किंसन कंजम्पशन फंक्शन इज क्लियर। कंजम्पशन फंक्शन में दो कंपोनेंट्स आपको याद रखने हैं, एक ऑटोनॉमस कंजम्पशन, एक मार्जिनल प्रोपेंसिटी टू कंज्यूम। और हमेशा मार्जिनल प्रोपेंसिटी टू कंज्यूम, जितना आपकी इंक्रीज इन इनकम होगी उतना आप 100% कंज्यूम नहीं करेंगे। आपकी इनकम अगर 1 रुपए बढ़ रही है तो हो सकता है 0.99 स्पेंड करें, 0.01 सेव करें। तो डेफिनेटली यू आर गोइंग टू सेव सम परसेंटेज ऑफ इट, यू विल नॉट स्पेंड द एंटायर। तो इसीलिए कहते हैं एमपीसी इज ग्रेटर देन 0 बट लेस देन 1। ठीक है, तो कंजम्पशन फंक्शन इज क्लियर। दिस इज द कंजम्पशन फंक्शन वी हैव ऑलरेडी शेयर्ड। ए क्या है? ए ऑटोनॉमस कंजम्पशन है, बी क्या है? मार्जिनल प्रोपेंसिटी टू कंज्यूम। व्हाट इज मार्जिनल प्रोपेंसिटी टू कंज्यूम? चेंज इन कंजम्पशन टू चेंज इन इनकम। वाईडी क्या है? डिस्पोजेबल इनकम। अगर गवर्नमेंट टैक्सेस बढ़ा देगी तो उस केस में क्या होगा? कंजम्पशन डिमांड कम हो जाएगी, बिकॉज आपकी डिस्पोजेबल इनकम कम हो जाएगी, बिकॉज टैक्सेस आपकी इनकम में से कम हो जाएंगे। अगर टैक्सेस कम हो गए तो ऑब्वियसली आपकी डिस्पोजेबल इनकम बढ़ गई, कंजम्पशन आपका बढ़ जाएगा। ओके, सो दिस इज व्हाट वी हैव शेयर्ड। आप कंजम्पशन से सेविंग भी निकाल सकते हैं, बिकॉज अगर आपकी इनकम 100 रुपीज है, अगर आपने उसमें से 80 रुपीज आपने कंज्यूम किया तो ऑब्वियसली 20 रुपीज आपने सेव किया। सो कंजम्पशन और सेविंग फंक्शन इंटरडिपेंडेंट है। तो यू कैन फाइंड आउट हियर सेविंग्स। इसमें आप देखिए एपीसी कैलकुलेट कर सकते हैं, एवरेज प्रोपेंसिटी टू कंज्यूम और मार्जिन प्रोपेंसिटी टू कंज्यूम। सो दिस वी हैव ऑलरेडी डन इट। अब इसमें एक क्वेश्चन आपको दिया है, एंड आई बिलीव हर्ष हैड पॉइंटेड आउट दिस करेक्टली, कि इसमें एपीसी क्या है? एपीसी इज एवरेज प्रोपेंसिटी टू कंज्यूम। एवरेज प्रोपेंसिटी, दिस इज रॉन्ग। एवरेज प्रोपेंसिटी टू कंज्यूम इज कंजम्पशन बाय इनकम। कंजम्पशन कितना है आपका? 300 करोड़। इनकम है आपकी 600, दिस इज 1/2। एपीसी कितना हो गया? 0.5। ओके, सो 50% of the total income you will consume 0.5. That is what it means basically. Okay, तो उसके बाद हमने किया consumption and saving function. Just now I have told you कि consumption के ऊपर savings depend करता है। जितना ज्यादा आप कंज्यूम करोगे उतना कम आप सेव करोगे, जितना कम आप कंज्यूम करोगे उतना ज्यादा आप सेव करोगे। ओके, सो हियर वी आर टॉकिंग अबाउट, वी आर नॉट टॉकिंग अबाउट इन्वेस्टमेंट्स हियर। यहाँ पे केवल हम बात कर रहे हैं सेविंग्स और कंजम्पशन की। किसके पर्सपेक्टिव से? हाउस होल्ड के पर्सपेक्टिव से। आप देखिए जब सेविंग्स और इनकम, डिस्पोजेबल इनकम बराबर होगी, दैट इज एट पॉइंट y1। एट दिस पॉइंट यू सी, जब सेविंग और कंजम्पशन बराबर होगी तो आप इस पॉइंट पे होंगे। बट सपोज आपकी कंजम्पशन ज्यादा है, सेविंग्स कम है, तो आप डिस सेविंग्स में चले जाएंगे। डिस सेविंग्स में मतलब ये माइनस, ये जो ए यहाँ पे ऑटोनॉमस है, ये यहाँ पे माइनस होगा, डिस सेविंग्स होगी। तो ये आपका ऑटोनॉमस है, बिकॉज आपकी इनकम है नहीं, आप स्पेंड कर रहे हैं, तो आप कहाँ से कर रहे हैं? डिस सेविंग्स ही कर रहे हैं। सो ये दिस इज डिस सेविंग्स, दिस इज ऑल डिस सेविंग्स। बट अगर आपकी इनकम ज्यादा है और आप कंज्यूम लेस कर रहे हैं तो आप सेव कर रहे हैं। तो ये देखिए आप, ये इनकम इज ऑन द हायर साइड, कंजम्पशन ऑन द लोअर साइड, तो ये आप सेव कर रहे हैं। सो दैट इज व्हाट इज सेविंग्स। सो y1 के राइट में आप देखिए, यू आर गोइंग फॉर सेविंग्स। वाई? बिकॉज योर इनकम is more than your consumption, and to the left of it income is less than consumption, so that is the savings. So this is about the concept of savings in a consumption and saving concept. यहाँ पे हमने इन्वेस्टमेंट भी ले आए हैं। अगर आप इन्वेस्टमेंट ले आएंगे तो देन यू हैव टू गो फॉर इक्विलिब्रियम कंडीशन में क्या होगा? इक्विलिब्रियम कंडीशन में सेविंग्स विल बी इक्वल टू इन्वेस्टमेंट्स. Consumption, because equilibrium is a position where consumption plus investments is equal to consumption plus savings. ये कॉर्पोरेट के पर्सपेक्टिव से हो गया, ये हाउस होल्ड के पर्सपेक्टिव से हो गया. दिस इज द इक्विलिब्रियम पॉइंट, दैट इज YG. ओके, Y1 में क्या होगा? Y1 में आप देखिए यहाँ पर लेफ्ट के ई में देखिए क्या हो रहा है यहाँ पर. ये क्या है? ये इन्वेस्टमेंट्स है, ये सेविंग्स है. तो इन दिस केस व्हाट इज हैपनिंग हियर? दिस इज द इन्वेस्टमेंट एंड दिस सेविंग. सेविंग्स लेस है, इन्वेस्टमेंट ज्यादा है. Isn't it? सेविंग्स कम है ना, यहाँ पे देखिए इन्वेस्टमेंट ज्यादा है, सेविंग्स कम है. तो इन्वेस्टमेंट ज्यादा है मींस, इन्वेस्टमेंट ज्यादा का मतलब क्या होता है? इन्वेस्टमेंट ज्यादा है मींस यू आर गोइंग टू प्रोड्यूस मोर. यू प्रोड्यूस मोर मींस आप लोग ज्यादा लोगों को हायर करेंगे, एम्प्लॉयमेंट जनरेट होगा, उनकी इनकम बढ़ेगी, आउटपुट बढ़ेगा. तो आप मूव कहां से करेंगे? Y1 से Y0 पर. इनकम इंक्रीज होगी. बट अगर आप राइट साइड में हैं तो आप देखिए सेविंग्स ज्यादा है, इन्वेस्टमेंट्स कम है. अगर सेविंग्स ज्यादा है, इन्वेस्टमेंट्स कम है मींस आप कंज्यूम लेस कर रहे हो, तभी तो आपकी सेविंग ज्यादा है. अगर आप कंज्यूम लेस कर रहे हो दैट मींस आप डिमांड लेस कर रहे हो क्रिएट. अगर आप लेस डिमांड क्रिएट कर रहे हो तो व्हाई शुड कॉर्पोरेट गो फॉर प्रोड्यूसिंग? उनकी इन्वेंट्रीज ऑलरेडी सरप्लस है. वो क्या करेंगे? दे विल स्टॉप. वो स्टॉप कर देंगे प्रोडक्शन, इन्वेंट्रीज जब तक एब्जॉर्ब नहीं हो जाती. तो प्रोडक्शन स्टॉप करने से एम्प्लॉयमेंट क्या होगा? कम हो जाएगा, आउटपुट कम हो जाएगा, इनकम कम हो जाएगी. तो आप किधर जाएंगे? फ्रॉम Y2 टू Y0. सो बेसिकली जहां पे सेविंग्स और इन्वेस्टमेंट्स बराबर होंगे. सेविंग्स क्या है इकोनॉमी में? सेविंग्स आर लीकेजेस. व्हाई लीकेजेस? जितना आप सेव कर रहे हो उतना आप कम डिमांड क्रिएट कर रहे हो. उतना आप कम डिमांड क्रिएट कर रहे हो मीन्स उतना आप लेस आउटपुट होगा इकोनॉमी में, इन्वेस्टमेंट्स होगा इकोनॉमी में उतना ही कम. सो लीकेजेस है. इन्वेस्टमेंट्स क्या है? इंजेक्शंस है. इन्वेस्टमेंट्स इंजेक्शंस क्यों है? आप देखिए फ्लाईओवर में इन्वेस्टमेंट्स हो रहा है, उसकी वजह से क्या हो रहा है? कितने लोगों को जॉब मिल रहा है? जॉब मिल रहा है, उनके हाथों में पैसा आ रहा है, दे कैन स्पेंड. उससे वो कुछ चीजें खरीद सकते हैं. दे आर क्रिएटिंग डिमांड. दे आर क्रिएटिंग डिमांड मीन्स अगर वो डिमांड क्रिएट कर रहे हैं कोई तो उसको प्रोड्यूस करेगा. सो उनके लिए भी एम्प्लॉयमेंट हो रहा है. मल्टीपल जॉब्स क्रिएट होते हैं इन्वेस्टमेंट्स की वजह से. तो इन्वेस्टमेंट्स आर इंजेक्शंस, सेविंग्स आर लीकेजेस. अगर इन्वेस्टमेंट्स होगा तो इकोनॉमी ग्रो करेगी. अगर सेविंग्स ज्यादा होंगी तो अभी कोविड में क्या हुआ था? सेविंग्स ज्यादा हो गई. सेविंग्स ज्यादा हो गई मींस लोगों ने स्पेंडिंग कम कर दिया. स्पेंडिंग कम कर दिया मींस कंजम्पशन लेस हो गया. कंजम्पशन लेस मींस आउटपुट कम हो गया. सो आई होप यू अंडरस्टैंड दिस. तो दिस इज क्लियर. सेविंग्स अगर बढ़ जाने से क्या हो जाता है? अगर सेविंग ज्यादा हो गई इन्वेस्टमेंट्स के रिस्पेक्ट में तो क्या होगा उस केस में? इन्वेस्टमेंट्स तो ऑलरेडी सरप्लस कर दिया उन्होंने, अब उसके लिए उनको इन्वेंट्रीज विल इंक्रीज एंड आउटपुट विल डिक्रीज. इन दैट केस उनके पास ऑलरेडी इन्वेंट्रीज पाइल्ड अप हो गई हैं, तो वो उसको कम करने के लिए उसको स्टॉप करेंगे, आउटपुट कम हो जाएगा, इनकम कम हो जाएगी. सो लीकेजेस इकोनॉमिकली बैड है, इंजेक्शंस आर गुड. एंड दैट इज व्हाई वी हैव शेयर्ड द कांसेप्ट डेफिसिट डिमांड. डेफिसिट डिमांड में क्या हो रहा है? डेफिसिट डिमांड में डिमांड ओवरऑल कम है, एग्रीगेट डिमांड कम है, कंजम्पशन डिमांड कम है. कंजम्पशन डिमांड कम है तो उसकी वजह से क्या हो रहा है? ओवरऑल इन्वेस्टमेंट्स इकोनॉमी में कम होंगे. इन्वेस्टमेंट्स कम होंगे, आउटपुट कम होगा, एम्प्लॉयमेंट कम होगा. आप किधर जाएंगे? यू विल शिफ्ट टुवर्ड्स लेफ्ट. तो आइडियली आपको होना चाहिए OQ एस्ट्रिक पर, बट आप कहाँ जाएंगे? OM पे जाएंगे. क्यों जाएंगे? बिकॉज आपकी कंट्री में डेफिसिट डिमांड है. डेफिसिट डिमांड क्यों है? बिकॉज आइडियली आपको होना चाहिए पॉइंट F पे, आपकी इकोनॉमी परफॉर्म कर रही है G पर. तो इन्वेस्टमेंट्स होना चाहिए आपकी इकोनॉमी में I1, बट इन्वेस्टमेंट्स इकोनॉमी में I0 है. तो दिस इज डेफिसिट डिमांड. डेफिसिट डिमांड में क्या होगा? डिप्लेशन होगा इकोनॉमी में, आउटपुट कम होगा, एम्प्लॉयमेंट कम होगा, इनकम कम होगा, तो आप लेफ्टवर्ड शिफ्ट हो जाएंगे. इन्फ्लेशनरी में क्या होगा? इन्फ्लेशनरी में you will be having more demand. Demand ज़्यादा है than the required investments. उस केस में क्या होगा? Since you are demanding more, demand is more than what the corporate had expected. Inventories will be short. They have to go for more production. More production, output will increase. But time कम है, demand ज़्यादा pace बढ़ी है. So to meet that gap, ओवर टाइम बढ़ जाएगा, कॉस्ट ऑफ प्रोडक्शन बढ़ जाएगी, ट्रांजैक्शन कॉस्ट बढ़ जाएगी, प्राइसेस इंक्रीज हो जाएंगी, वेजेस इंक्रीज हो जाएंगी, इन्फ्लेशन इससे बढ़ जाएगा. इन्फ्लेशन बढ़ने से यू विल बी स्विचिंग ओवर, बिकॉज ऑफ दिस इन्फ्लेशन विल बी हायर, सो दैट इज इन्फ्लेशन. सो इन्फ्लेशन गैप क्या होगा यहाँ पे? FG विल बी इन्फ्लेशनरी गैप. बिकॉज आप परफॉर्म कहाँ कर रहे हो? आप परफॉर्म कर रहे हो टू द राइट ऑफ द फुल एम्प्लॉयमेंट. आप देख रहे हो अभी कहाँ M पे परफॉर्म कर रहे हैं आप? टू द राइट ऑफ इट. उस केस में आप उसके लेफ्ट में परफॉर्म कर रहे थे फुल एम्प्लॉयमेंट को. एंड व्हाट इज फुल एम्प्लॉयमेंट? फुल एम्प्लॉयमेंट मींस जब सारी रिसोर्सेस फुल्ली यूटिलाइज्ड हो जाते हैं. ओके चाहे वो लेबर हो, चाहे वो कैपिटल हो, सब कुछ okay. Leakages, yes. What is your query related to leakages, Krishnan? Yes, you're right, Krishnan. If that money is invested into shares, mutual funds, which comes back to the banks, and through the banks it goes back in the investments, that is not leakages. But if the money is, that's why you see that government of India talking about gold exchange traded funds and others. So gold is also leakages. People keep gold and they keep it in the locker. Once you go for that money, if you invest in the terms of financial instruments, that goes back to the economy. So you're right, Krishnan. In that case, it will be about investments. That is back to the economy. That's right. Yes, Mancha, classical economists believe supply creates its own. JB say, yes, you're absolutely right. So Mancha is saying about classical economists. JB say was a very well-known economist and classical economist, and he said about supply creates its own demand. So if there is supply, demand will automatically be created. Okay. 1.68. Yes, yes. What is your query related to 1.68? Yes, yes, right, right. Okay, so I want to ask you a few questions and if you can answer. So first question to you people is regarding what is the core difference between classical and Keynesian economics? Two differences between classical and Keynesian. If you can write about what are the two core differences between classical and Keynesian economics. What is the difference between John Maynard Keynes' concept of determination of national income and classical economics? That's number one. Number two, what is the difference between deflation, deficit demand, and excess demand? Deficit demand and excess demand. So this is number two. Number three, the question which I wanted to ask you is about with respect to, let's say, with respect to marginal propensity to consume. Why marginal propensity to consume is greater than 0 and less than 1? Why marginal propensity to consume is greater than 0 and less than 1? And Then I want to ask you one more question related to APC, average propensity to consume, that why with increase in income, average propensity to consume decreases. So these are the questions. What is the core difference between classical and Keynesian? Classical and Keynesian, and classical is about supply, aggregate supply, price and wage are flexible. And in the case of Keynesian, prices and wages are rigid. It is about aggregate demand. In the case of Keynesian, there can be full employment, there can be equilibrium despite having involuntary unemployment. In the case of classical, there's always full employment. Over there, as Mancha said clearly, the supply creates its own demand in the case of classical. There's no role of government in the case of classical. In the case of Keynesian, government plays an important role to overcome economy from deficit demand. Then MPC, why MPC should be is greater than 0 and less than 1, because if income increases, we will always go for spending, maybe more, but not 100% of it. Some amount we always save. That is the notion which has been proposed by Keynes. Why APC reduces? APC reduces because as you have more and more income over the period of time, your average propensity to consume decreases. What is propensity? Propensity is desire. Deficit demand is demand which is less when the leakages in the economy are more than injections. That means savings are more than investments. That leads to lack of aggregate demand. This deficit aggregate demand leads to reduction in inventories. To reduce the inventories, they go for reducing output. Output reduces, employment reduces, income reduces. And this is about reverses too in the case of inflationary gap, deflationary gap. Okay. Okay. So for some, it is difficult to understand in Hindi. Some for it is easy. They want to be sum up in Hindi. So I've tried my level best for both the players to take care about. Okay, then that's it for the class. And if you have any queries, you can share. Anything you want to ask? Otherwise, I'm going to find out. National monetization is not mancha leakages, it is injection. This government has given it to others to take care about it. Acha, I've got answers also, very good. Keynesian theory is demand driven, very good, very good. Very good. Very good. Payal, Ritika, Pooja, Jasprit, Ankshi, all have written correct answers. Very good. Okay. Okay. I don't want to practice this, Jasprit. All should be encouraged. So if I start doing it, others will be discouraged. I don't want to do this. Deficit demand is the demand where actual demand is less than. Very good, very good. Okay, so, okay, good, very good. Okay, then bless you all. Bye. Take care. Bye.